Good evening, everybody. Had a lot of different requests for the different type of topics tonight, so we're going to kind of do a smattering of some, but then I'll go to the live charts to kind of enhance the topics that we do work on. And I've been getting a lot of requests for I lost my train of thought. That's just if I got a quick drinking this early in the evening. A lot of requests that people say, well, I've got this buddy that he'd like to come on. Is there a special? We might do kind of a free training for like 2 weeks, or free membership for people that you might want to have come on and see what we're doing in here. We'll try to make it some sort of special where you can bring people on, and then if they like what they see and they sign up, also you might win a prize. I have to figure out what the prize is. SH, I'll see if we can do a trial for the options room. A Santa book, there you go. Okay, so here's some of the things that people were asking about today is entry and exit strategies. We did kind of the exit strategies last night, but this is kind of the basics, the candlesticks is the entry. So our first priority, obviously, is to find the best trades. And that's basically using common sense analysis from what the charts reveal or what the candlestick signals tell us. And that's essentially boiling down to, all right, that's Ben Crosby. Alexa, stop music. You're bothering everybody. Told her. Now, if I could tell Sandy that type of thing, life would be better. So essentially what should be that's right. Essentially, now I forgot what I was saying. Oh, essentially what people should be learning about investing is not knowing the fundamentals and analyzing what stocks are going to be good out in the future because they've got good management, good marketing, blah, 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 blah. Prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals or investor sentiment. So when we've got the graphics, which is candlesticks, of the investor sentiment, that's where you're going to start much more accurately assessing when people like a stock. You might have the best company in the world with the best products and the best management and a wide open market, but if nobody's paying attention to it or wants to invest in it, it's not going to go anywhere. You can have some of the worst companies in the world, but if some people start getting a liking for it and think it's got great prospects, that price is going to move. So once we've found the change of investor sentiment, next is how do we enter and exit those trades at the optimal time? So this is the first thing I always stress anytime we do any type of training is what is the market direction? So even though we might see things that are setting up for a reversal, what do we want to take a look at first thing in the morning? We want to see whether the market is planning to go this way, or go this way. that's true too, Will, and I think whiting is probably an example of that. But the first thing we want to analyze, and the first thing I do when I turn the TV on in the morning, is see which way the futures are showing. Are they going in the direction we expected them to? Now, another major mental facet of investing is candlesticks are probably the most accurate trading vehicle, mechanism, method that I've come across in 40 some odd years of investing. But there's one big statistic. I know that probably 70% of the trades I'm going to make are probably going to work positively. Now, some of them might be just make a 0.3%. Others might make 300%. But what really got me going profitable-wise was getting my emotions out of my trading, realizing that 30% of my trades aren't going to work. So when we're looking for confirmation, we're looking for that if we see something set up, we want to see that it's confirming. If this had opened lower here, that told us that this signal was not working. Now, there are 4 elements for entering a trade if you think the market is bullish. If the next morning we wake up and the pre-market futures are higher and the stock that we're looking at as a confirming a buy signal is opening higher, yeah, it's probably going to be 90 seconds to 5 minutes of getting into that position. If the market opens higher but the stock price opens lower, something's not working yet, even though there was a buy signal. Not going to jump into it, but when is our entry? If it starts showing positive from the open and coming back up, for example, through the previous day's close, that tells me they just opened it lower and now they're confirming the signal. If the market opens lower and the stock price that I'm looking at opens higher, obviously you don't need to jump in right away. You watch to see whether it's going to move positive even with the market trading down, or if it's just going to kind of hover there waiting for the market to correct itself and start coming back up. If I see the market opening lower and the stock that I'm looking at is opening lower, I just kind of scratch that for the day. So this is what we're looking for. We see a buy signal. What do we want to see the next day? Just common sense says we want to see the bulls are still there, confirming that signal. And that confirmation could be even more powerful when we see a signal and then a gap up. Gap up, gap up. And so now we've got indicators, obviously, that improve our probabilities, such as a gap up through the T-line, or a fry pan bottom with a strong reversal signal, and then a gap up confirming. So these are the type of things that we're looking for. We may not have the research resources to understand why this stock is being bought. But all we're doing is analyzing what everybody else's research departments are telling them and that they're buying. All we want to see is that they're buying. We did the profit taking last night, where the probabilities are starting to go against us. And again, what is our biggest fear of taking profits, or at least mine, which I know everybody else was, Bill, I don't know why you don't have sound. But what we're looking for is, when is the probability starting to go against us? Obviously a sell signal up in the overbought condition. Yeah, let's see. Or if we've moved too far away from the T-line. These are some of the simple things. And the reason I'm rushing through this is I want to get to the live charts. But we've got some simple visual aspects that tell us when it's time to start taking profits. And one of them is the distance away from the T-line. If they're gapping up in huge moves, what is good human or logical human nature? Somebody's going to start taking profits. We just want to see when that profit taking is starting. So here is what we call 2 plus 2, or convergence analysis. When we can start putting multiple pieces of evidence that this is where the bulls are buying. A gap down in the oversold area. What's the Japanese rice traders tell us? Start looking for buying, because that's usually the exhaustion. Where do most people sell? They panic sell at the bottom. Indecisive trading, right smack dab on the 50. All right, good, Bill. And then bullish confirmation. Positive open the next day after the bullish confirmation tells you two things. It's confirming the buying, or the buy signal, and it's telling you the T-line is not acting as resistance. So just these simple techniques tell us when to buy, and simple techniques tell us when you're too far away from the T-line, start taking profits up here. How do you know to take profits up here? You go to your 10-minute chart. As long as the 10-minute chart stays above the 10-minute T-line, you stay long, but you keep moving your stop up. So that as soon as you see a sell and start trading back below the T-line, that's a good time to take profits. And why would we be doing that? Because we've got the simple alert that we're way too far away from the T-line. And when that happens, what does human nature do? Somebody's going to start taking profits and probably bring it back down to the T-line. We also have indications of when we start seeing sell signals not necessarily closing below the T-line, that you might start getting ready to take profits because it's showing you weakness up here. So too far away from the T-line, go to your 10-minute chart. These are just some very simple analysis aspects that candlestick signals provide that most other techniques, I probably should say all other techniques, do not even address. I've listened to many supposedly trader gurus in the past through the years. They never tell you how to take profits. And this is where the common sense elements of candlesticks greatly keep your emotions out of your trading. So if I see something like this and we're moving too far away, I start moving to the 10-minute chart. Now, one of the things, or I guess the major thing that keeps people from making money is our emotions. And I say that in a general sense that I know I was always lousy at making profits because I was just a pure emotional trader. I was buying the rumors when somebody's being bought out, and usually when I bought out, when I bought, it immediately turned south and went the other way. When I couldn't stand the pain of being in the trade anymore and sold, I was always wondering how come as soon as I sell, it starts turn around going back up. And once I started seeing the graphics of candlesticks, I realized that my emotional trading was basically what most people do, and that's why candlestick signals are so effective, because they show you exactly what most people do. And so all it was simple logic to say, well, if I was the panic seller at the bottom and it started going up, who was buying down there? And obviously it was the smart money, not the stupid money like me. And so Simple logic says, well, if I turn my trading strategy around 180 degrees, now I'll be buying with the smart money and selling with the smart money. So money management. If we find a pattern that looks good, you got to remember, it could work out great, or you've got a 30% probability that it busts out and then pulls right back. You got to close out the trade. But here's what I did with my expectations. That if I expected to be 70% a winner, I could also expect 30% losers. But what do most people do with their portfolio? And I can bet you dime to donuts, there is a good number of you right now that have X number of dollars in the market, and you may have, I'm going to say 10 positions on, and I bet you one position is 24,000, another position is 12,000, another position is 3,000, another position is 8,000. You have no method of knowing what to be doing with each trade, and I can pretty much guess that if you've got a number of positions in your portfolio, you're probably spending most of your time watching the two biggest positions you have, which means you're not really paying attention as much to what to do with the other ones. I keep all my trades equal dollar amount. What that does is it eliminates, let's say for example I've got a $10,000 portfolio, I'm going to have 10 $10,000 positions. And why did I set that up for myself? Because I knew I was an emotional trader. And that if I decided, boy, I really like this one position, I'm going to buy an extra large amount of it, I'm probably going to spend 90% of my time watching that one large position, and my other 9 positions I'm paying little attention to. What that does is, because you mentally think you're so clever, and I'm talking about myself, that you're so clever that you found the best trade in the world, that when it doesn't quite work like you expect it to, or it goes the opposite way, your rationalization is, well, I'm smart, this should be going up, so I'll just hang on to it for an extra day or two to see if everybody else understands why it should be going up. A couple of days later, you're saying, well, man, I should have sold it, but I'm going to see if it's going to turn around. And then the next day, it's going down further, and you finally close out the position. Why? Because that was your favorite position. You put your emotion, your ego into it, and instead of doing what the chart tells you what to do, you were doing what your emotions were telling you to do. So when I put on 10 equal dollar amounts and I see a position not working, I can rationally say to myself, this unit of my portfolio is not working. Let's close it out and move on to something else. Are you saying that if price is extended from the T-line, use the 10-minute chart to see if there's any selling, profit-taking going on so you can decide to sell as well? Yes. Let me go back up here. This is a high probability situation. If we're, if this is our pattern, our fry pan bottom breakout, what do we expect from a fry pan bottom breakout? A good strong price move. But what is our alert when it gets up here? Look how far away we are from the T-line. That's when you go to your 10-minute chart and start using your 10-minute chart to tell you when to get out. Now on this day, that second big day, we closed it out right here. But it turned around and came back up and we bought back in. So what's the logic of buying back in when you're that far away from the T-line? Because we know that a fry pan bottom usually has a very strong price move. So we bought back in and we closed out at the end of the day when it closed back below the T-line. So the further away you move from the T-line, a very simple T-line rule, the higher the probability it's going to come back and test it. So that becomes one of your alerts. And when you're away from the T-line, flip to your 10-minute chart. So keep your emotions out of your trading. That's what I've had to do. I was the worst investor in the world. I was a stockbroker for 8 years, and you can understand why when the public starts coming in, it's time to get out. That's because stockbrokers are salespeople. When everything looks good, they start getting their clients in who are not expert investors, and they're usually getting them in at the top. We also had requests for debit and credit spreads. And different option strategies. Because there's a number of them, we're going to do all those on one night. We'll just do an options strategy night. But what we want to do is kind of really clarify the entry strategy. So let's do this. And this is the easiest way to do it. Let's see, easy if I can get the live charts up. Very simple process. If we wake up in the morning and we see the pre-market futures are showing positive trading, what was our analysis on the Dow up to this point? We're in a very slow, choppy uptrend as long as we're staying above the T-line. And so what did the positive open today tell us? They were still probably staying above the T-line. Now, it wasn't a very decisive day. Pretty much opened within a few points, or closed within a few points of where it opened. But what was the underlying trend analysis? We're still in a slow uptrend. So when we recommended different chart patterns, it's because of the probabilities. So we had kind of a ticker gap up through the T-line, coming out of the oversold area. And what was our previous analysis? Wave 1, wave 2, now high probabilities that we're going into wave 3. So we can make somebody was asking, how do we calculate targets? First target obviously is the recent high, because that's what everybody's watching to see if it's going to get back to the high. If it goes through there, what can we analyze as the price move? Wave 1 and wave 3 are probably going to be the same magnitude. Now, that does two things for us. One, tells us with a high degree of probability which direction we're going in. But two, tells us whether this is a worthwhile trade or not. If I'm buying today with the expectation it's going up here, is that a worthwhile trade? Well, that looks like it's going to be about a 15% price move. I'm willing to go after something that has a 15% price move. If it breaks through this level, we know this move went from 20 to 30, 10 points. That tells us we could get up into the $37 range. That's another good, I could figure that out, probably about a 45% return. So if this was a 2% move, and it could go up another 6% after that, 8%, might say, that's probably not the best place to be recognizing a good profitable trade and only making 8% on it. Let's go find a chart where we have the potential of making 15 to 45%. Now, does that mean it's going to go up here? No, we've set ourselves up to be in a position where the prospects are that it could be this big. And what's our main criteria for holding this position? We stay long until we see a sell signal and a close back below the T-line. let's see. So this is where you want to start recognizing the other features of a price move. We re-recommended NNDM. Let's get rid of that. I get rid of that. Okay. And this is, again, observe the obvious. Yes, Lev, Sandy actually went and bought some of the apple cider. So thank you. Is it too late for TRIP? Probably not. If it opens positive tomorrow, you've got a doji sandwich telling you this direction is, yeah, and I avoid eating bread anymore. Anything made with flour. Anything, I guess anything white. Unfortunately, that's the problem. Lev is, I've got such bad arthritis in my right knee, I can hardly walk. And so that's the catch-22. I can't get my knee replaced until I lose a bunch of weight. And I'm having a hard time losing a bunch of weight because I can't move around. So, but it's getting to the point where, since that's my only alternative, I'm going on a severe diet. Not a severe diet, but a logical diet. So anytime we can see, oops, I went to NMDM. This is, again, observe the obvious. Yep, did it again. We know we're in an uptrend. And it's still getting, yes, I forgot to, Ron. I'll try to remember to tomorrow. So, number one, just like analyzing the market, analyze what direction is this going? And what does it seem to be doing every time it comes back to the T-line? Bounces up and goes to the top of the trend channel. So, what's this tell us? It's bounced off the T-line. Good prospect is going to come back up to the top of the trend channel. From here to, say, up here, looks like it's another 20% upside. I had a bottle, I hate to change the subject, but while we're on it, I bought a bottle one time of it was a concentrated kind of, they were, and it was the type of thing you're supposed to mix 2 tablespoons in with a glass of water. Well, I circumvented that process one morning because I forgot to bring down the water. So I just took a swig of it. And as soon as it hit the inside of that, my mouth, I didn't do it, my body reacted, just spit it out, ruined that keyboard. But man, that was, that's right. So anyways, observe the obvious. Every time it comes back down and tests the T-line or the signals telling us that it's probably heading back up. So that's one trading method. Yes, I think she got natural let's see. Oh, okay, we got to get back on topic here. AQB, another one that has the prospects by just seeing what it's doing here at the T-line, starting back up. That wasn't one of the great examples I wanted to use, but here's a good example of the T-line rule. That if you see a fry pan bottom, even though yesterday was a bad hair day, notice what it did. It bounced right up off the T-line. And when it opened positive today, that told us they were taking it up, and something shot it up going into the close today. It had a good, strong price move. So every time we take a look at a chart, we want to see what the pattern is. Fry pan bottom breakout with a best friend. And this is where knowing the nature of each signal. Look how the pullback. Look at the uptrend. Big move, big move, big move. Pullback, indecisive, indecisive, indecisive. Right back to the T-line. So what does that kind of imply? That the profit taking or the selling is not very decisive. Get ready for this next move. That means the profit taking is just occurring. The uptrend should continue. So these are things that once you become visually aware of what's going on in a candlestick chart, it allows you to be buying a little bit more aggressively at levels that most people aren't buying. Good Morningstar signal turnaround in VLDR today. But what was more compelling? The fact that it did it right here at the T-line with this uptrend. So what's the upside potential on this one? Still pretty strong. They could come back up into this range, giving you a very strong price move. All right, fish oil. All right, thank you, Roy. So the information that is built into each candlestick signal tells us exactly what's happening to investor sentiment. What do we expect in a fry pan bottom? Nothing. Just indecisive, junky trading. What do we expect here? The information that tells us there's now a new investor sentiment, and what can we expect from this? Wave 1, wave 2, wave 3 could be the same magnitude as this wave right here. So this is not rocket science. This is just taking the information that the Japanese race traders have provided for us and identified the signals and patterns that work very effectively. This is what we call the classic pattern, which is the fry pan bottom breakout J-hook pattern. And notice how this J-hook pattern started today with a little gap up and breaking out through this level. What's that imply? Still a lot of percentage upside. Even though this is a, what was it, $1.36? Shoot, it just comes up here, and that's a good, I can figure this out, 25% profit. And it could do it in one day on these breakout moves. So the entry strategies are knowing where a signal is occurring. A kicker signal right off the T-line, breaking out through this wave 1, wave 2 sideways, going into wave 3. And what should we infer from this kicker signal? There's a new strong investor sentiment, more than likely creating wave 3. So if we can see what everybody else is watching, in this case on Las Vegas Sands, we had a nice little strong buy signal. Yesterday it opened up, but faded back. I don't know what line I drew yesterday, but the trend pretty much told us that when it got up here, if it broke out, we were in wave 3. But what did it tell us up here? They weren't going to break out. So I was buying calls on the close here and bought some more here. But when it closed here, I closed it out because now what's this chart telling us? Nothing major going on until they can get back up through this level. Now I say until, we don't know whether it's going to kind of drift sideways, head back down. So why have my money sit there? And if it's an option, it's going to be degrading, I guess, with time. I'd rather buy it up here knowing that a new investor sentiment has taken over. Oh, I was getting right down what I was going to. Oh, so here's your entry strategy. Look how this was rolling over. Failing at the T-line, even though we're in the oversold area, it looked like it could be starting the next wave down. So why do we wait for confirmation? Because of that type of situation. It's either in the oversold area and it's ready to break down into a new wave, or this might be a support area. That's why we always want to see confirmation. That's why many times I hear people say, well, could we be shorting it at the close? Why risk it? Why not add to your probabilities that it's moving in the right direction by seeing it confirm versus trying to guess whether it's going to confirm the next day? Bidu, observe the obvious. There's your little slow curve. There's your classic pattern. So this is why I keep stressing, learn your patterns and learn what happens here at the T-line. When you start adding this stuff together, you're going to put yourself in situations where the probabilities are much greater of being in your favor. So even on a day like today, when we saw the positive open after a doji, what could we expect? A doji sandwich with a candle same magnitude as this. Let's make this bigger so we can see what we're talking about. Well, if it started trading positive, what was it telling us? A doji sandwich breaking out? But a big move like this, that's, yeah, you can't always catch those, but knowing when you should be buying puts you in situations where the probabilities are much greater that you're going to be in one of those situations. What do you look for to determine what direction a stock is going to trade for the day? Well, Linda, that's exactly what we've been showing. Whether you've got a pattern breakout, whether you've got the doji rule, which means if this opened positive today, it was probably going to move in the direction of how they opened it. That's your doji rule. That was kind of the same scenario here on GP, that when it came back down and showed the consolidation was over, if it opened positive today, it was probably trading positive. Why? Because it was telling us this pattern. So it's not that you can identify a specific candle is going to trade positive on a day. It's taking a bunch of those candles. Here's another example. Indecisive, indecisive, indecisive. If this opened positive tomorrow, there's a good probability that there's going to be strong buying because they came right down to the T-line. Seemed to support. If they opened up positive, we're probably in a J-hook pattern wave 3. So it's not not the particular candle on a given day, it's what's setting up. Why would this one be a good expectation to open positive? Because you can see how a slow curve and then an inverted hammer opened positive, it was going to go positive. Just a high probability setup. Oh, let's see, this was to give that example from way back over here. Look at our kind of our bobble breakout. and then it opened positive. That told us this trend was definitely had a high probability of trading positive. Would you enter a trade right away if it gaps up? Not right away. The first thing I want to see if it gaps up is that it's trading positive. I'd rather be a few pennies or 25, 30, 40 cents late, but knowing that it was heading in the direction we expected it to. What we don't want to see, not on here, we don't want to see something open positive and then immediately go the opposite direction. I'm trying to think of which one that was recently. Okay, thank you, Joey. Top of the candle on silica is not visible. All right. Yes, that would be a good example. That this opened positive, looked good, but it immediately started selling off. So what's our trading strategy? We don't buy it until it turns around and comes back up through that that open. We saw that a little bit today on, I think it was ODT, where it opened and it immediately started trading lower, so it wasn't working. And it turned around and came back up through the open. That was the time to be buying. Some info on fund, which was mentioned. They are at risk of being delisted. Ew. That can't be. Oh, delisted even from the NASDAQ? Well, Don, the only thing I can tell you there is you can trade fun until they take the T-line away. Where'd you come up with this stuff? Whiting, yes. So a lot of people will say, well, should we be buying on positive trading today? I'd rather see it close positive and open positive the next day. I might get in it a little bit later, but I know that my probabilities are much better to be moving in the right direction. All right, so we've got, for the new people in here, we've got a training. It's usually a 2-day training, learning all the candlestick signals and patterns, what they mean, how to identify them. And that's your ABCs of candlesticks. Then we've got the next training up, which is the top ranked signals and patterns, which are things like your best friend, doji followed by a gap up, or your left-right combo, your kicker signal, your fry pan bottom breakouts, things that have high probability trade setups. But then we're going to be doing another one that's kind of even enhances those trade setups by adding other elements to the chart. For example, a morning star signal on Yelp, and then a doji sandwich, and then positive trading today. This is what we knew we could be buying immediately on a positive open today. After the positive open after a doji, and after a kind of our McMuffin pattern. So Kodak, after gapping up and pulling back, look where it's pulled back to. Right smack dab to the 50-day moving average, doing kind of a morning star signal after a little gravestone doji. what's the probabilities? If this opens positive and starts trading up through the T-line, it's telling us the Morningstar signal is confirming and that the T-line is not acting as resistance. Just a much stronger probability trade. How do you value bull candle signals below the T-line versus above the T-line? Right now, this is below the T-line. If it started trading up through the T-line, I'd start thinking about buying. If it's right at the T-line, and I see a bullish signal, I'm trying to think of one. If it's right at the T-line, or pretty close to the T-line, and you see a bullish signal coming up pretty close to the T-line, you might as well just wait, because you're not going to give up a whole lot of profitability if you wait for it to confirm by going up through the T-line. If it's way below the T-line, say it came down here and the T-line was up here and you saw a strong buy signal, at least you can factor that the first target is going to be back up to the T-line. Yes. Yeah, Jim just put on a link that if you want to catch up on different products, the books, I've written 3 books on candlesticks, the flashcards, the mouse pad, and the poster. I tell people the 2-foot by 3-foot glossy poster of the candlestick signals are something that every American family should have hanging in their living room. Jeff, you'll have to email Abraham at Candlestick Forum to see if that special is still on. Oh, yeah. Okay, so 2 plus 2 is taking the information that we can identify in a candlestick signal or pattern and then add other elements. Like there was a left-right combo followed by a gap up breakout. The fact that they did a left-right combo right here at the T-line and opened positive put us in a high probability situation, or a much higher probability situation. Here's one that when it came up through the 50, this is just kind of logical deduction. That's right. For the bathroom, that's true too. Look at what happened right here at the 50. I mean, this is just observation that we can get much more information in our minds to say, well, they aren't selling back below the T-line, or I'm sorry, the 50. They're supporting at the 50, and they're not selling it off with any great urgency, dojis. And then you have a left-right combo right off the 50. Where do you think your next target is? At least up here to the 200-day moving average. The 3T line, I don't use it as much on the buy side. I use it more on the sell side, so that the further away you start moving from the T line, the more effective you will be using the 3T line. It also enhances your entry, that if you see indecision, when you see buying in the 3T coming up through the T line, that's just that little bit more added confirmation that the bulls have taken control. If you can see a good strong chart pattern that came up through the 50, came right back to the 50, did a Morningstar signal, what'd that tell us right here? That everybody that was watching this one saw it was supporting at the 50, they're going to be ready to be buying. We're either buying on this day or as soon as it opens positive the next day. So this is 2 plus 2 analysis. If we can recognize the pattern, fry pan bottom, kind of a scoop type pattern, we can be buying on this day knowing this is all adding up to the possibility of a move, a positive move. And again, rhetorically asking ourselves, will this always have big, huge price moves? The answer is no, but it puts us in situations of being in those. Worst case scenario, it may just be a slow up move, but that slow up move on a candlestick pattern is still usually going to produce much more excessive profitability than just merely an uptrending stock in an uptrending market. That's what we're looking for. Now, some people say, well, shoot, it did this. Was this bad? Yeah, and this would have been another case where I would have gone to the 10-minute chart if I had bought here, if I'd been watching this, or somebody said, hey, look at WBAI, it gapped up above the 200, and I saw it trading here. Very simply, we go to our 10-minute chart. If they're still buying, we can be buying. Now, will all moves be this big? No, but if it's that big, if a stock moves from 250 and the next day it's trading at 680, what do you think's going to happen? Somebody's going to start taking profits. We just have the mechanism, the 10-minute chart, to tell us when to start taking profits. But if this is profit taking after a gap up and they open up positive the next day, the inference is the profit taking's over, the strength that caused this is still here, you can start buying again, or start buying at that point. So this is what we're going to be doing, hopefully one Saturday this in January when it's cold and yucky outside, is that not only recognizing the strong top-rank signaling patterns, but what the pattern setups are that are telling us we're in a not only a good, strong price move, but better probabilities that we're going to be in a good, strong price move. So as we can see, there's our message. Next day told us that the profit taking was over. Whatever caused this gap up, the profit taking's over, and now they're back to buying. This one has a very good looking chart. But what do we see happening on this chart? Whoops. Let's take that away. And let's kind of look at this. Kind of that wedge formation. So where did it close today? Right on that resistance level. If it opens positive tomorrow, what would that imply? Everybody that's watching this wedge, seeing it's breaking out, they're going to start buying. We can see that there's a strong buy signal, kind of a little morning star signal right here. Gives us a lot more impetus to jump in on positive trading. The message is, which one was it? This right here is the message. Whoops. Gaps up. Very strong breakout. But it's not a good looking chart, is it? They're selling it off. But what was the message? The message was they were buying this with great enthusiasm, and then profit taking set in. So what do we want to watch based upon the color of the candlestick signals? We want to see when that profit taking's over, telling us the strength that caused this in the first place. The profit taking's over, now that strength has kicked back in. But this was the message. Even though it didn't look good, the message was they were trying to get in with great enthusiasm. CLNE, observe the obvious. What do we have coming out of a fry pan bottom? A strong price move. Pulls back, basically to the T-line, does a bullish harami. If it opens positive, what's our pattern? The classic pattern. So this becomes an excellent place to be buying. So what we want to do is not only train ourselves to recognize the signals and patterns, but what would be the setup for the next pattern, or what would be the signals telling us get ready for this next price move. Do you wait one more day to confirm the profit taking is over? Definitely. Oh, on the, what was it, SIFT? Yeah, if I saw this, and again, if I had bought somewhere during the day and maybe came out and saw it doing this, I don't take it off my screen because this is still a strong message. They were buying. So what am I looking for the next day? Seeing if the buying starts. So if I saw this where it opened and traded down and then started coming back up through the open, because of the graphics, the candlesticks, this would start turning green again. And that would tell us the profit taking's over. What would be my trading strategy? I might be buying right here with the idea I expected it to move back up. And if I bought right here, where would be a logical place to put your stop? Right back down here where it opened, because if it came back down through there, who was in control? It would be telling us the bears were in control. You want to be right back out of that trade. It wasn't doing what we expected it to be doing, confirming that strong buying. All right, so these are just kind of little tidbits of entry and exits based upon the signals and patterns. I didn't get time to address the longer-term holds, but on patterns like this, when you see a breakout, at some point you're going to hear in the news that the electric vehicles, the lithium batteries, the charging stations all seem to have a good future. Now you can't assess that by a candlestick pattern, but what you can do is be alerted to candlestick patterns that are showing a sector is starting to move pretty good. And you can say, well, the electric cars are seeming to be moving again, like in NIO. Let's make and I think the NIO sector is pretty strong, meaning not only for currently, but over the long term. I might start getting ready to buy because I'm not just assessing that this is a long-term good chart. I'm being alerted to that there's a lot of interest in the electric vehicle sectors. Maybe I should do a little research and see if that's something I want to hold long-term. SP, yes. I didn't know who the name was so thank you. I will look at those tonight. Yeah, the message is different than a belt hold. Whoops. The difference between a message and a belt hold would be that a belt hold would come all the way back down into the trading range. That would tell you the bears are still in control. The difference between a message and a belt hold is the message stays well above the trading range, telling you there's a lot more upside because they didn't sell off, was just profit taking. On longer term holds, when or what signal would indicate a get out now? Usually a very strong sell signal, which could be a big, huge bullish engulfing signal. or where do most people buy? They buy exuberantly at the top, a gap up, and then maybe a shooting star or a gap up, a doji. Now, that means you want to change your parameters. If I'm trading a stock right now, I'm using the T-line. But let's say I was buying Blink for the long term. I might be more apt to use the 50-day moving average. But because it's moved so fast, you can put other indicators on. Somebody was mentioning today about putting on the 20-day simple moving average. Yeah, that might be another indicator to put on for a longer term hold. All right, so before we sign off here, the number one assessment every morning is seeing what the pre-market futures are telling us. Now today, or tomorrow is the last trading day of the year. There's probably going to be some portfolio shifting, but the logic is if it's had a strong price move during the year, a portfolio manager is not going to sell it off, because when they start showing everybody what they've done for the year, they want to say, well, we're holding XYZ that's had a strong move this year and we expect more. They want to kind of showcase that they were in a good, strong price move. They don't want to say, we were in a good, strong price move, but we sold it the last day of the year. So I would suspect that we're just going to be lollygagging tomorrow, not anything major. But that would mean tomorrow's trading is still going to have the aspects of the strong stocks are still going to continue to act strong. Because nobody's going to, I think it's a half day. Does it close at 1 o'clock tomorrow? Well, I thought it was open all day long. Okay, it's a half day. No, full day. All right, so now we're getting really confused. Early close, yes. Okay. That's what I thought. I thought the bonds closed at 2 o'clock tomorrow and the market closes at 4. Okay. All right. Well, we're coming up into usually January is cold and dreary. We will be doing some, we'll probably be doing a lot more training sessions during the month of January. So that would be, here's one thing that I advocated years ago, that if you've got kids that have any inkling of investing, start teaching them candlesticks from the beginning, because the teachings of Wall Street are backwards. They're going out and analyzing companies that supposedly have good fundamentals, good management, good sales, good everything, but that's not what moves prices. So if you want to be a successful investor, go from the other direction. See what is moving prices, and then analyze why they're moving. So with that, everybody have a good evening. We will see you bright and early tomorrow morning for the final day of the year. We'll see you then.